Hey, what's up? It's Greg. Welcome to the channel. On this channel, we talk about markets and investment. And the purpose of this channel is to make you a better investor. On this video, I'm going to talk about, is Exxon Mobil still a buy? And does the recent proxy battle have any effect on my recommendation? Now, before I get started with what I'm actually going to talk about, this is the first video I've put out with the name change. I changed the name of the channel from Digital Lifestyle Adventure to DLA Markets. I thought that would give folks a better understanding of what the channel was about. DLA Markets and Investment was a little too long, so I just shortened it to DLA Markets. So we'll see how that goes going forward. Anyway, last week was a big week for Exxon Mobil, and as most of you probably know, and I did a video on this, which I'll put at the end of this video so you can check it out. There was a proxy fight. Engine number one was a very tiny hedge fund that got together a bunch of large public sector pension funds and a couple of other large investors like BlackRock that were being pressured by their investors to, cajole companies to be more environmentally friendly, etc. I'm not going to talk about that issue on this video, but the result was that it looks like they'll get at least 2 board members as a result of that proxy battle. They tried to get 4, they ended up with 2. I've heard in some reports that they might get 3, but for now, they have 2. And the question really is, is this proxy battle really going to change Exxon's basic strategy? And more importantly, what does it mean for Exxon stock? And as you know, if you've been following this channel, or even if you haven't, I have been a very strong supporter of Exxon. I recommended it back at 33. It's now around 60, and it's had a fantastic dividend yield. And I have been putting it forth as a major way to play the turnaround after the pandemic. And it seems like this is really, so far, really working out quite nicely. So let's get right into this thing. Who are these 2 people that have been elected to the board, and will they affect anything going forward? The first person is Jeffrey Goeff. He does seem to have a lot of energy experience. He doesn't seem to be a crazy Green New Deal type of guy. He developed a company apparently with some refiners and sold the company to Marathon Oil. And apparently he has a very good reputation in the industry for knowing the oil and gas industry and the energy industry in general. Paul Sankey, who is one of the top energy analysts who I have featured on this channel actually, says he does have a very good reputation and he is well respected by investors in the industry. And he predicts that he will be more involved with Exxon's management structure and lack of entrepreneurship within the company, rather than pushing Exxon into some crazy renewable strategy that may or may not pay off, or at least doesn't have any proven track record of paying off. The second person, Keisha Haitala, I don't know if I'm pronouncing that correctly. She also apparently seems to, I assume it's a she. I assume it's a she. Let me know in the comments if I'm wrong on that. But she apparently was on several notable boards. One, Neste, which is a Finnish refiner. She apparently was instrumental in getting this Finnish oil and gas company to diversify into renewables. That's her big claim to fame. She was also on the Carlyle Group's board, and Smurfit Kappa Group, which is a paper and packaging company. So, presumably from that, she's not an idiot. So probably of the two, more inclined to try to push the company toward a renewable strategy or a lower carbon strategy. But as I said in my previous video, Exxon already is taking that issue very seriously and has a very robust technology in place which they're developing for carbon recapture. So it's not like they're blowing off the whole subject. They might not be moving as quickly as some would like, but having said that, I think that they're trying to move in that direction as we speak. So what does this mean? Okay, there are 12 board members on Exxon Mobil's board. These are only going to be 2 people. The effect that they're going to have, certainly in the short term, is going to be minimal, if any effect. I'm sure the board will work with them in a congenial way and try to take their views into consideration. But at the end of the day, when you only have 2 board members and there's 12 board members, in my opinion, it's going to have a very little, if no, effect on Exxon's overall strategy. And certainly as an investor, you should not be concerned that all of a sudden they're going to have forays into all kinds of unproductive, unprofitable Green New Deal ventures. It's just not going to happen, okay? Exxon, and I also have expressed this many times on this channel, and Chevron are and will continue to be the best examples of pure oil and gas plays in the energy business, which is why I love it so much, and which is why many on Wall Street hate it, which is why I love it, because it keeps the valuation down and makes it more attractive for all of us that know that oil and gas is not going away anytime soon. So let me just summarize as part of this video the 4 basic reasons why I think that the investment thesis is still in place and why I think that Exxon Mobil is still a buy even at these levels, which is around 60 as of today. Number 1 is demand will continue to rise. Oil prices today, West Texas Intermediate was around 71. Sorry, that was Brent crude. Brent crude was around 71. WTI has hit 68, almost 69. And so that is going to continue as the economy turns around. There's going to be nothing but increased demand. The airline industry is picking up, people are traveling again, etc. So that's still in place. Biden's policies with this crazy left-wing agenda that he's pushing will continue to put pressure on supply, at least in the United States, and will continue to make oil and gas exploration more costly, which of course accrues to the benefit of the integrated oil and gas companies. Okay, so that is still in place. In addition, I think that Exxon is one of the best positioned companies in the industry with one of the lowest marginal costs in the industry. And when there's pressure on the commodity, we all know that the lowest marginal cost player will always have the advantage. And Exxon Mobil has shown in their projections that they can be profitable below $30 a barrel, and in some cases even as low as $20 a barrel, which is completely awesome. And I also still like the valuation. I put that in there with them being well positioned. The valuation is still great. They still have a 6% dividend yield, and as I've stated many times on this channel, if oil goes to 100, as I think it might within the next year or so, this stock's going to 100. So you got 40% increase in appreciation potentially, and if you buy it today, you still get a 6% dividend. You put that in your IRA and not pay any taxes, and you put it in a DRIP, and it's going to be a very profitable investment for you going forward. Okay? And of course, the last reason is that this proxy battle will have no material effect in the short or midterm. In my view, it's much to do about nothing. I'm sure Exxon Mobil's management and the board will pay lip service to reducing carbon. I think they are taking some real steps in that direction with their carbon capture strategy. But bottom line is, for the foreseeable future, which is certainly my investment time frame, and it should be your investment time frame, there will be no change to Exxon's strategy, and they will benefit in a highly leveraged position when the economy continues to turn around and oil demand continues to grow. All right, well, that's what I have to say for now. And if you got value out of this, please like and subscribe and hit the bell so you can get notified when I come out with other videos. And we're going to be continuing along with talking about these types of investments and many of the other investments that I've talked about in the past. And I'll be coming out with some new ideas as things change in the market and as I see opportunities that come up. Okay? So I'm looking forward to you subscribing so you can be on board for future videos that'll be coming your way very soon.